All right. Welcome to another episode of Tuesdays with Audi, and I am your host, Audi. Before we get into this week's episode, as promised, I need you to go ahead and recap on the $100 portfolio, because if you have not done so, a lot of this is not gonna make any sense. So go ahead, pause the video, and go ahead and watch that episode. And once you are done, then you can come back and let's go ahead and dive into this portfolio and the performance that it has over the past month. Now that I got you all here, let's get into this portfolio and let's move on to the computer. So let us recap some key things from the initial portfolio. Remember, the average purchase price for each of these companies are listed here. The amount that was invested into each company is here. The most riskiest company that we invested in was HPNX, and we put $7 into it. These are the tickers for each one of those companies are listed here. The first two are ETFs, and the second two pay dividends, but a little bit more riskier than the ETFs. The number of shares that we got for each of these companies are here. And this is the total amount that we invested into this portfolio. No BS, exactly $100. So let's see, no clickbait, it's $100, and that's what we're working with. 4 of those companies pay dividends, and this is the frequency in which they pay their dividends. And so this is the total amount of dividends that we expected to get paid if all 4 of those companies pay us at the same time. And luckily for us, in the month of July, all 4 of them paid their dividends, and we're going to see if it is exactly the amount. But the thing is that the dividend payment for the last one that we used this in order for us to calculate the dividend payment, but then those numbers are likely to change, seeing that there was just estimates from the last dividend payment. And in the month of July, those were updated based on the first 2 ETFs of VOO and BND. But P2A, MFA kept their dividends at the same amount. So let's look at the initial portfolio and see what has happened since the 25th of June, 2021. Here is the current portfolio. Let's look at the current price of each of these companies. So we see that the current price of VOO is this given amount. And then if you look straight down, you'll see the price of the rest of them. Notice that ATNX, from the price that we purchased it to the current price, it has gone from $5.08 all the way down to $3.80. That is, let's look at the percentage increase / decrease. It's likely a decrease because clearly the price dropped, right? It should make sense if I calculate it. So this is going to equal to the current price divided by the original price, which is the price we purchased it at. I'm going to subtract 1 from it. And then we are going to see that this is exactly negative 25%. So that means that our ATNX value has dropped by 25%. So yeah, remember, ATNX is that one that was like, YOLO, we're gonna hope for the best, but we ride this one all the way to bankruptcy. And this is the reason why we put only $7 into this company, because we know this is gonna be a rough ride. So therefore we have to protect ourselves mentally and emotionally for this particular ride. No need to worry, it's still okay, don't mind the crocodile tears. We know this was gonna be rough, but let's see how this actually turns out if we continue to do this. And we ready to see what has happened after just 1 month. 1 month doesn't necessarily tell the entire story, but it's a good basis for us to actually use in going forward. Still have the same number of shares that we started off with. Now, the only thing on this next row in column F, in the next column, which is column F, is the fact is that we're going to look at what is a market value. The market value of a stock, or in this case, let's look at the stocks in our portfolio, is the number of shares that we have times the current price of the stock. So in this case, let's look at, we have our number of shares is this number here, and let's use VOO with the current price, and let's see if this makes sense. So this is going to be equal to the number of shares times the current price, and boom. Notice that let's change this from a percent. Let's go ahead and put this back in numbers. So let's change this to the currency. So we're going to hit the account, which is the $sign. This is exactly the same number, which is $3.85. So that's how we calculate the market value of current price of the stock. And we did this for every single last one of these going down. Now, the dividend that was declared for VOO is $1.45, about $1.46. And so this was totally different from the amount that we had in our initial portfolio. Let's track back. Notice that it was $1.26 that was from the one that we use as estimate. but now it is $1.46. So that means that they paid us more dividend in the month of July than the previous dividend from the last quarter. And so we see that the dividends received in this case is 11 cents. And the way that we can calculate this is that we take the number of shares, let's go equal number of shares, which is column E, multiply that by the dividend that was paid, which is the one that the amount that was declared. We multiply those two and we get exactly the amount, which is 11 cents. So this is how we calculate the amount of money that we will receive in terms of dividend payment based on the number of shares that we have. And we can do it all for the rest of the companies that paid dividends in this case. Now, this is something new that we definitely have never touched upon, but we have seen this in our savings account. You know that when you make a deposit to the bank and you know that you have a savings account, there are going to be interest payment made on your account likely every 3 months. So then that interest payment is put on the principal, which then increases the amount that you have in the bank, which now you are paid interest on this new amount that you have. This is what the compounding effect is in terms of you having money in the bank. This is why I say compound interest is so important. But then in the stock market, you can apply the same concept of compound interest with dividend paying stocks. So the thing is that you can use your dividends for it to buy you more shares in that company. And then now that you have more shares, then you can get more dividend payments from this company whenever it issues its dividend to you being a shareholder. I've been tracking this. And so the price that we purchase each of these companies at to the dividend reinvestment is that at the 11 cents that I got at VOO, I purchased it back at $398.85. And if you look at the rest of them, you can see the prices that I purchased them at for me reinvesting my dividend into these companies. And then these are the amount of shares that they were able to get me at purchasing these shares at these pennies that I got for dividend. Notice that they're not a lot, but then it does increase the amount of shares that I have in those companies, even though it's a very tiny fraction of the company that I'm getting. And this is the total amount of shares that we got from dividend reinvestment. And of course, this is the total amount of dividends that we got paid by these 4 companies in the month of July. So then now we can go back to the table and see those numbers. And this is the updated amount of shares that I have after I totaled the amount of new shares that I bought with the dividend and the old shares that I have. So for example, with VOO, this was the starting number of shares. This is the shares that I actually got from dividend reinvestment. And now this is the updated number of shares that we have for VOO after the 11 cents was reinvested into this company. And now the thing is that notice that we started off with a $100 portfolio, but the thing is that we got 59 cents paid in dividends. So how much is my portfolio currently worth? Do the math. Let me know. Drop it in the comment below and tell me how much is my portfolio worth. And now the new market value of my portfolio can be reflected in terms of what the market has for each of those companies. So then you notice that with the market value that I started off with the original shares was $30.85 for VOO. Now it's $30.96 after I updated it for the shares that I got for the reinvested dividends. So now notice that the $30.96 and the $30.85, the difference between those two is exactly 11 cents, in which I received for my dividends. So that means that the market value of my portfolio will be reflected on those dividends that I have for each of those companies that paid me dividends. So then the last thing we want to look at is the stock loss and gains. You notice that we had a 96 cents gain from the original $30 I was invested, then 43 cents gain from the original $30 invested into this company, a gain of 3 cents for MFA, a loss of $1.23 and a loss of $1.76 from our troubled child, but is expected. And then the overall portfolio performance is that we are currently down $1.56 after the first month of this portfolio being invested into these 5 stocks. No, it's not a good thing that it's down, but remember, this is $100 that we should be content to lose, because we made up in our mind at the beginning of this that this is $100 that we wouldn't necessarily need. So therefore the up and down fluctuation of it in the market shouldn't necessarily make us feel bad. And notice that we had exit strategy for each of these companies, except for the 2 ETFs. I said that I was going to hold them forever. For the 2 other dividends paying stock, which is MFA and PSEC, I had exit plan just in case I feel too overwhelmed with the fluctuation that they will have. So therefore I have a loss strategy for me to get out, as well as a strategy for me to get out for profits as well into those two companies. So we are down $1.56, which is not too bad, but it's also not good in terms of us, wanting to actually see our money do well in the stock market. But that's all I got for you guys this week. This is the update on the portfolio. Hope you guys have, benefited from this. I know it's like a mad scientist mess going up in here, but try my best to try something new to keep you guys flowing with what I'm saying, and you can see it in real time as I show you these particular things, as well as doing some calculation on the screen to show you how these numbers can be found in your own process of trying to understand what is going on with all of these things happening in the market, as well as trying to understand your portfolio and making sense out of it as you navigate your investment journey in any given vehicle, whether it's a stock market or anything else. The percentage, these small calculations play a big role, so therefore we need to understand what they are, as well as the jargon and the lingo when it comes to certain aspects of where we have our money. So let's get off the screen. That was a lot to say. Jesus, I need water. But hope you guys enjoyed this review on the portfolio. I hope you guys have learned a lot from it. And we'll be doing this once a month. Don't forget, if you guys want to see more of this, let me know. If you want to learn anything else in terms of, if anything didn't make sense, let me know. And I have a question for y'all. I was thinking about putting an additional $10 in this portfolio, but we all saw how badly ATNX has dropped. My thing is that it's below the price I purchased at. So what do you think? Should I go ahead and put some more money into ATNX just, to kind of, get more shares? Or should I just keep my $10 in my pocket and go to Starbucks and buy a latte? Tell me, what do you think I should do with it? Latte or buy ATNX, or probably put it into any of those other stocks? Drop in the comment below, let me know. Don't forget, hit the like button, subscribe and share, turn on those notification bells. And as usual, peace, love, enjoyment. I'm inside. Jesus, this feels weird. Deuces, I'm Audi. I'll see you all next week. Swash.